Good morning, Board of Directors. We are group number 4, and today we're going to discuss with you all the case of Ferro Industries and what is happening, what are the issues that are going to let us to find some solutions to this problem of the company. Our group is composed by Verdi Velázquez, Carla Crisanto, and Betsy de la Cruz, and me, Sergio Delgado. And today we're going to discuss the challenge of Ferro Industries, that is a small firm. Before I start go deeper in the case, we have to summarize what's happening with Ferro Industries and which type of company is Ferro Industries. First of all, Ferro Industries is an Indian company specifically located in Nueva Delhi, the capital of the country. That country specializes in the production of industrial materials, some machinery for productions and lines of productions. Since 1995, the company has always strived for excellence and in all its products by using high-quality raw materials and personalized service. Ferro Industries' comparative advantages over its competition, international or national, is the quality of its products. They make a lot of investment in technology to have the latest advantages, and through quality and control procedures, they personalize the service on its product to guarantee the 100% of satisfaction to its consumers. But what is happening now with Ferro Industries? In 2010, Saudi Arabian customer Isuf placed an order in which has not been able to complete the 35% of the agreed payment, putting Ferro Industries in financial difficulties. First of all, we have to know which parts are involved in this case. First one, the exporter and importer. The exporter is composed by two persons. Gamira, the export manager of Ferro Industries. She is in charge of the delivery procedures, the packing, all the logistic issues. And Jatendra, who is the CEO of Ferro Industries and also the husband of Gamira. And the other part, who are the importers, are Yusuf, is the owner of the company, the Saudi Arabian company, and is also an Arab sheikh. And Kumar, his manager of Yusuf's companies, that deals with Gamira. One of Ferro Industries' challenges is that this company is a self-finance company. We have to know that if you don't make an investment or has a credit history in the banks, maybe it's because you are not trustful or maybe you don't trust in the banks. So one of the problems in the company is that they don't have a close trusting relationship with banks, which can be very helpful in these cases. What happened here? How can manage the challenges of having limited available resources and limited access to capital to complete a large overseas order? We have seen that Ferro Industries had in the past a deal with the Indian government, but they didn't have the capital or the sources to complete that order. So in these cases, for further uh, contracts, they have to take in consideration these two very good options. The first one is the export of working capital that consists in the company ask an Indian bank or maybe an international bank, and the bank is going to lend in advance some money to complete uh, the procedures, the logistic parts, the industrial parts, the freight, and so on. And after the payment, for example, maybe it can be a open account payment after 15 days or 90 days, Ferro Industries is going to receive the money and then is going to pay the bank. And the other option is the factoring. Is similar to the export of working capital, but in this case, Ferro Industries ask the bank for some money, and the bank lent in advance also the money, but in exchange for some percentage of the money. For example, Ferro Industries needs $600 and the discount is going to be five $5,000. So the amount of money that Ferro Industries is going to receive is $55,000. We have also to give some recommendations to Ferro Industries about the strategies of building and maintaining marketing customer relationships. Here, Ferro Industries does not yet realize the great potential they have in the area of international and public customer relationships because they did a very good job. And very good example is the, the agreement of Gamiria and Yusuf. Gamiria led Yusuf to the restaurant, invited some very good food. She took in consideration the cultural differences. She made a tour for him to New Delhi, and that's a very good example of what a good relationship is between the company and the customer. I have some here, some possible marketing strategies that can be used by Ferro Industries. The first one is value-based pricing. We know that this Indian company cannot compete with a Chinese company due to the cost and the labor force. It's more cheaper in China. That's why a value-based pricing can be the best option. Increase the value of their services, the value of its products, and don't make a price war with the Chinese companies. The next one is network marketing. It consists in virtual fairs due to this pandemic. Maybe there are not going to be some international fairs, in physical way. So they have to introduce to this uh, social network. And the third one is international qualified certifications. If they want to introduce their products or offer their products in abroad or in the international markets, they have to have some uh, international quality certifications that are going to increase the value of its products and it's related to the value-based pricing. About the customer relationship strategies, I would recommend the after sales services because they already give first one personal treatment, second high quality customer service, customization of products to the consumer's requirements, high quality control for the delivery of the machines. And those strategies really connected with a very good after sales services is going to be very helpful to the company.
Well, brand strategy with competitive advantage. In this case, in order to develop this strategy, we must first analyze the companies that compete with Ferro Industries in order to plan a sustainable and competitive strategy on the basis of this information. In the case of Ferro, we have both national and foreign competitors. Its main national competitor is Divine Machines. This company is considered large and well positioned, so it is rather difficult to compare since it has a credit record that facilitates loans, established customers who really on timely delivery of their products, a wide variety of good quality products offered at an affordable price. Then we have the Chinese competitors. The main competitor is the SME Chinese Engineering. This company is characterized by its low cost of products since finding a lower labor price in China. Manages to have a profit is even greater with the discount it offers on their products compared to other companies. After analyzing these three companies, it was considered that the strong competitive advantage that Ferro Industries has and should continue to enhance it's the level of adaptation to the best customers. This means that Ferro seeks customer satisfaction, and therefore whenever he has an order or a pending delivery, is concerned with his wife that all the specifications given by the customers are met quickly. They also consider it important to comply with everything offered, such as the specification of the measures of the machinery, the materials of the machinery requests, the delivery time, the effective coordinations of shipment, and departures, and among other things. Ferro should enhance this competitive advantage because this can gain many customers and especially loyalty to use their machinery and be brand ambassadors. Next, please.
In the light of Ferro's experience, the payment strategy that guarantees the payment order to the export also reduce finance risk is the letter of credit. Firstly, the importer have to find a way of guaranteeing payment to export before the goods are received because of the time it takes for cargo shipment from freight ports to reach their destination. Second, the bank promises on behalf of the buyer that to pay the issued bank that belongs to the seller. This occurs after having verified and connected the document present in the specification of the letter of credit. That is really, a letter of credit is offered for the exporter in the case the importer goes bankrupt or runs out of funds as happened with Yusuf. This is because the solvency of the importer is transferred to the Yusuf bank. It is the bank's obligation to pay the amount agreed in the letter of credit. Thus, a letter of credit isolates the export from the imported commercial risks. Finally, the letter of credit allows the exporter to make use of pre-shipment financing, helping to fill financial gaps. Next, please. Support a decision to have over the machine to Yusuf for the following reasons. In the first place, Industria Ferro was going to lose a negotiation for not accepting a form of payment. Second, Yusuf was a long-standing and important customer ordinary from abroad, nothing that when the company began its expansion. Yusuf was one of the first buyers abroad. Third, the increase in additional charges to the forest authorities was generally expensive for both. Finally, Yusuf understood when Ferro had delayed with the order because now he had to drive this far. Next, please.
Payment methods for Ferro. For this, the best way for Ferro industry to secure the payment of company is to use the method of payment in advance, as this method is very favorable and will help you to have economic solvency and cash flow to be able to make the necessary investment before any project. But this method is not very effective as there because are many competitors who could remove customers from Ferro Industries on the basis of a more affordable price and better payment terms than the full payment in advance. For this, the most appropriate payment for this company is to apply the letter of credit. Since this method is a process in which the bank assures you payment when the conditions are met based on the exporter's request. In spite of being a method that assigns a commission for the bank, it is the safest in terms of risk on the part of the exporter and payment on time point. Within the type of letter of credit, we will request a commercial signs. It will ensure us that through the issuing bank payment will be appropriated when the goods are in the place of destination and have met the specification requested by the buyer. Next, please.
About the communication, I consider the communication was an important factor. Garima and Yatendra in the evening informs useful a transparent way about the progress of the machine, informing him of an estimate date for complicate and dispatch his order. However, Yusuf didn't report his lack of liquidate to able to pay 39% of his order. This means that's prepayment percent is in respect. Despite these issues, Garima tried to solve the problems by communicating directly with Yusuf and gave him his order, but that only create uncertainty about if Yusuf will be able to pay the commercial invoice in full. And either it isn't clearly established who should pay additional cost. Next, please. I consider 4 factors that influence Garima decision to release the machine to Yusuf. The first antecedent, okay. Ferro industry, there is an antecedent about the ferro industry lose a negotiation for not accepting a form of payment, and this factor makes her question Gamira about the competitive ferro industry. Other, it's a strong cost 100 or 150 per day that machinery reach merchandise remade. Usually inform him of inconvenience or usually feel uncomfortable because for this additional cost. And other Yusuf asked Garima to trust him like he trusted them. The fear of losing a customer again present Gamira decision. Okay, next. Okay, after having analyzed the case, we would conclude and recommend that first, Ferro Industry want to have international participation and didn't care so much about the situation of their customer. In that case, is Yusuf. The recommendation about it before making a business deal, Ferro should be analyzed their customer or future customers.
The second conclusion is companies must reach an agreement with their partner to solve the possible risks of not payment. The recommendation for this is employing a payment strategy that reduces the possible risk of not payment that the letter of credit may.
Well, the third conclusion is Ferro industry needs a solid logistic strategy and cost projection of expenses to improve and organize their time and resources for future large orders. And the recommendation for that is hire a consultant to help you detect any flaws in your logistics and finance systems.
The fourth conclusion is that Ferro Industries has already a very good customer relationship management. Instead of continue with that, they have to explode that quality that the company has to increase that strategy of added value or based value pricing. The recommendation for this conclusion is explode this advantage, and if Ferro Industries should further show to its clients these services and apply some marketing strategies to complement its positioning in the market, either national or international. The fifth conclusion is that the factoring and the export of working capital are very, very good options for this company. Those options are going to increase our capital, are going to increase the solvency, and are going to be some maybe investments and have more solvency. And the recommendation for this last conclusion is that Ferro Industries should rely more on banks. The managers of Ferro Industries says you don't have to be afraid of dealing with the bank. The bank can be either your friend, if you want, or either your enemy. But we know how to make the bank our friend and work with us. So you have to rely more on banks and employ some strategies that are going to increase our financial solvency. And these strategies are going to be either medium or long-term investments. We thank you so much for requesting our consultancy. We are very glad of working with you. And I hope our recommendations are going to be the best for your company, and we hope the situation with your client in Saudi Arabia is going to end in the best way. Thank you so much.